Most traders are sitting here asking, why is Bitcoin not moving? Why is crypto still bleeding? Why gold is at all-time highs? Why does it feel like everything is broken? It is not broken, it's sequenced. There is a specific order in which institutional money flows through markets. And if you understand that order, you stop being confused by what's happening and start being positioned ahead of it. Today I'm going to show you the sequence live, right now across 3 charts: gold, Bitcoin, and Solana. And I'm going to show you exactly what the institutional volume terminal is reading on each one. Because the contrast between these 3 charts is one of the cleanest examples of the Cantillon sequence I've seen in months. Before we look at the charts, let me just give you the framework in 60 seconds, because without it, the charts are just pretty pictures. The Cantillon effect is a 300-year-old economic observation that describes how new money moves through an economy. It doesn't arrive everywhere at once, it flows sequentially from the source outward, and whoever is closest to the source benefits first. Look at this picture. I think this shows it in a very good way. In modern markets, that sequence looked like this. Layer 1, it's bonds and precious metals. This is where central banks' liquidity arrives first. When the Fed eases, when inflation expectations shift, when real rates fall, gold moves first. It is the most sensitive asset to liquidity conditions because institutions treat it as the primary store of value in a monetary expansion. Layer 2, it's the equities. Once liquidity establishes itself at layer 1, it flows into stocks. The S&P 500, Nasdaq. These are layers 2 assets. They need layer 1 to be healthy before they move sustainably. And then we have layer 3. It's risk assets. Crypto, Bitcoin, Ethereum, Solana. These are the last to receive the flow. They are the most leveraged expression of liquidity in the financial system. They move the most when the cycle is running, and they fall the most when it isn't. The IVT terminal tracks where we are in this sequence in real time. And right now, the sequence is telling you something very specific. Look at this from the dashboard. It shows the Cantillon flow dashboard. Liquidity is bullish, equities bearish, risk bearish. Layer 1 is receiving the flow. Layer 2 and 3 haven't seen it yet. Let me show you how it looks on an actual chart. This is gold futures on the 4-hour chart. And I want you to look at where the terminal is reading up in the right corner. The bias is bullish. That green label is not something this indicator gives out easily. The IVT only reads bullish when price is trading above the anchored VWAP, the institutional cost basis, and the volume structure confirms it. So VWAP deviation on 15.85+%. Gold is trading nearly 16% above the institutional cost basis. That blue line you see here, it's climbing steadily from the bottom of the left of the chart. That's the EVAP. Price has been above it consistently since late November. Every dip has been bought. Every pullback held above the line. The Confluence Score is 9 out of 10. This is the highest reading I track. A score of 9 means every major component of the terminal is aligned. Regime, volume structure, macro context, Cantillon flow. Everything is pointed in the same direction. And then look at this volume compression, coiled at 91%. This is the reading I want you to pay attention to. When the terminal reads coiled, it means volatility has compressed to the point where the next directional move is loading. Think of it like a spring being compressed. The tighter the coil, the more energy in the release. At 91%, gold is fully coiled. This is what bullish regime looks like. A rising AVAP, price consistently above it. So this is how a bullish regime looks like. We have a rising AVAP, price is consistently above it. We have coiling volatility setting up for the next leg. Gold is at layer 1 of the Cantillon sequence. The money is here. It is confirmed. It has been here for months. Now let's look at what layer 3 looks at right now. Bitcoin. This is the same terminal. It's the same time frame, completely different picture. If you look up in the dashboard, we have a bias that is bearish. We have a red label, price is trading below the anchored VWAP. And look at this blue line. It is not rising like gold, it's declining steeply from the upper left of the chart. That means the institutional cost basis is moving lower. Institutions are not defending at level here. They are repricing downwards. The VWAP deviation is on the 4-hour chart -1%. So we are pretty close to a solution or a resolution. And now that number looks small compared to what I showed you on the gold. But here's the context. Bitcoin's AVAP has been resetting lower as the bearish swing matures. We have a -1 reading against declining AVAP. That's not the same as a -1 against a stable one. It means price is still below the institutional reference point, even as the reference point itself moves down. We have a Confluence Score of 3 out of 10. Compare that to gold's 9. This is a low conviction reading. Not enough structural evidence for regime reversal. Stability is 0 out of 2. This tells you no basis forming, volume structure is not consolidating at the current levels. Now, we see a lot of strong deviations clusters here around 63 to 64. That's interesting. The signals are clustering around 63 to 64,000, multiple divergent signals at the low. This is the terminal identifying that selling pressure is weakening at these levels. Institutional buyers are starting to show up, but not yet with enough conviction to flip the regime. We actually, on my terminal, had a buy back on Wednesday the 25th, but the bias was still bearish, which in my book means no trade. So very important to only buy when it is bullish bias. And look where price is now. 67,000, right below this red line at 68,000. This is a critical level. The IVT identifies this as the zone where the bearish regime either continues, price rejects here and head back towards the low, or begins to transition. The volume compression expanded 50%. It's not coiling yet. The volatility from the sell-off has not compressed into a base. Compare that to gold at coiled 91%. Bitcoin is not spring-loaded. It's still in the middle of the move. The Cantillon flow says accumulation. Macro bonus is +2. This is the upstream signal. Liquidity conditions are improving. The same macro tailwind that's driving gold. But Bitcoin is 3 layers removed from the liquidity source. The upstream is getting better. It hasn't arrived here yet. And if you look at the win rate, it reads 100% on 15 out of 16 closed trades. That's the terminal's track record on Bitcoin in the current regime. So sell the rallies, don't fight the AVAP. That's my stand so far. And then there is Solana, layer 3, end of the sequence. The bias is bearish. The VWAP deviation is -0.75 on the 4-hour chart. More structurally damaged than Bitcoin. The AVAP is even further above price. Look at the blue line. It's declining from 180 while price trades now at 85. The Confluence Score is 5, is slightly higher than Bitcoin's 3, but still well below any regime change threshold. Stability is 0 out of 2, same as Bitcoin, no base is forming. This is the major overhead supply zone, the volume shelf from the distribution phase. The point of control from the prior trend sits up here. This is where institutional sellers have their reference point and rally towards 95 to 100 without volume confirmed and AVAP reclaim is a distribution zone, not a breakout opportunity. The swing low structure sits around 76. That's the structural invalidation level for anyone positioned long on a longer time frame. Below 76, the bearish thesis accelerate with no meaningful volume support until much lower levels. Volume compression expanded 50%, same as Bitcoin. Both layer 3's assets are in the same phase. Post move, not yet coiling. So here's the picture on the 3 readings. Gold bullish, Confluence is 9, coiled 91%. Layer 1, the money is here. Bitcoin, bearish, Confluence 3, expanded 5%. Layer 3, upstream improving but not arrived yet. Solana is bearish, Confluence 5 expanded 50%. Is also a layer 3, more damage than Bitcoin. This is the Cantillon Sequence live right now on March the 1st, 2026. So what does this mean practically? It means the trade is not chasing Bitcoin or Solana right now. The regime hasn't flipped. The AVAP hasn't been reclaimed. Volume compression hasn't built yet. None of the conditions for a sustainable long are present. And I know a lot of you wants to buy the dip. You can do that if you are long term. It makes sense to buy spot right now. But as a trader, you really have to respect the regime. What it also means is that the Cantillon sequence is progressing. Gold is confirming layer 1. Liquidity is accumulating. The macro bonus across all the three reads +2. Upstream conditions are improving. The question is whether the money eventually flows from gold into Bitcoin and Solana. In every prior cycle it has. The question is when. And the IVT terminal is designed to tell you when, not to make you guess. 3 things need to happen before I change my stance on BTC and Solana. First, the AVAP reclaim. Bitcoin is very close and Solana doesn't have a long way to go until we will see that. If it flips from a bearish regime to a bullish regime, I need to see that happen before I will go into a trade. And it changes my framework from sell rallies to buy dips. Second, the volume compression needs to enter into coiled territory, like gold is right now at 91%. That tells you that volatility is compressed and the next directional move is loading with conviction. Third, Cantillon flow needs to progress from accumulation to early cycle, meaning equities need to confirm before risk assets follow. None of these are present today, but the upstream signals are building. Gold is telling you the first domino has fallen. The sequence is running. The IVT terminal tracks all of this every day across Bitcoin, across Solana, across the S&P, the Nasdaq, and precious metals, and even key forex pairs. Every morning before the US Open, paid subscribers get the full dashboard, the regime readings, the Confluence Score, the VWAP deviations, and the specific levels where the thesis changes. The link is in the description if you want to know more. I even have a 7-day trial for you. If today's breakdown resonated with how you want to approach the market, the link to the Cantillon report is in the description. The daily brief is only $39 a month. And if you want to run the IVT indicator yourself on TradingView, the link is there too. One last thing before you go. The Cantillon sequence is not a prediction. It's a framework for understanding where money is and where it's going. Gold doesn't guarantee that Bitcoin will follow. It tells you the preconditions are forming. That is a very big difference. The traders who lose in this environment are the ones who see gold all-time highs and assume that Bitcoin must follow immediately. The traders who win are the ones who wait for the sequence to be confirmed. AVAP reclaim, volume compression, regime flip before committing any capital. So as I always say to my subscribers, regime first, volume second, price last. If this was useful, subscribe, like. I publish these walkthroughs regularly, and the chart setups only get more interesting as the sequence develops. So see you in the next one. Trade safe. Bye bye.